In the summer of last year, we partnered with Leeds University Business School, and we did a survey of 197 defined benefit schemes, and we also had a focus on trustee effectiveness and decision-making. And it's fair to say that our results were somewhat different to that of the FCA survey. And we've got a short video now from Dr. Ian Clacker of the Leeds University Business School, who's going to outline some of the results from that study.
The first thing we wanted to understand is the level of education that trustees actually possess. And so when we examined the sample, we found that 78% of trustees had a university degree. This compares to only 37% of the general population. So relatively speaking, trustees are much more educated than the average person in the street. The other thing that we then wanted to do is understand their financial literacy around some quite basic investment concepts, because there's a general perception that trustees don't really get the basics. So we asked questions around things like compounding, time value of money and inflation, and the results show that 72% of trustees get 5 out of 5 on this, and 21% of trustees get 4 out of 5 on this. So actually 93% of trustees got 80% or above, which is actually indicative of quite a high level of competence. The other thing that emerged was that trustees understand quite a lot about diversification and risk, so they could quite easily rank investments based upon their risk profile, and also no matter how we asked them about diversification, they understood this core concept. From our analysis, the average trustee is a 54-year-old male who has a university degree with 10 years of experience. But actually, in looking at the age profile of trustees, the majority are aged 50 to 70. One issue that did emerge when we analysed the data is one of diversity. When we looked at the gender makeup of trustee boards, we found that 1 in 5 was female. This compares very favourably to a 2006 study that found only 1 in 40 trustees was female. Gender diversity on boards is increasingly being seen as quite an important factor in effective board decision making. So in the corporate sphere, we have seen evidence that suggests processes and decision making is improved by this gender diversity. It's likely this is also going to occur within trustee boards, where we see boards that have very, very similar makeups in terms of board membership, so everybody's a bit similar, a bit the same. This is potentially going to lead to groupthink, which can be quite pervasive and quite destructive when it comes to decision making. You end up with an echo chamber where everybody has the same views, perceptions, experiences and backgrounds, and so you end up with some sort of confirmation bias in the decision making process. So actually, the increase that we're seeing in gender diversity on boards is one which is suggestive of a better decision making process within trustee boards. One issue that does remain, however, is the lack of age diversity. So while the gender situation is improving and is likely to help with decision making, there is potential for better decision making still, or at least broader perspectives to be gained by actually improving the age profile of trustees. When we wanted to understand what trustees get about costs and fees, we split this analysis into 2 distinct parts. The first looked at explicit costs and fees. This is the part of a trustee's job that they should really have a handle on, and it is what they do just now, by and large. So actually, the results show that trustees, and the vast majority of trustees, have a real handle on net of fees. So when asked to pick the best fund in various circumstances, then actually trustees selected the best funds on a net fee basis. The next part of the analysis then focused on implicit costs and fees. Implicit costs and fees are really the area of controversy when it comes to fund management just now. So we asked trustees to report their familiarity with a whole range of implicit costs and fee terminology. And actually what we see is trustees had a lot lower confidence and a lot lower familiarity with these. This was also slightly worse when we got to smaller schemes of under 100 million. So this now becomes important with regards to the FCA review. Given that trustees aren't familiar with these implicit costs, if trustees are going to do their job effectively, once implicit costs become a much larger part of their job, more has to be done today to support trustees to get a better handle on these costs, because it's the only way in which they're going to be able to hold their investment managers to account properly in a world where implicit costs are a much greater focus.
So with that, I just wanted to wrap up. So in certain times, we've talked a little bit about defining those investment principles, thinking where you're heading, removing those unwanted risks, and setting the criteria for your growth portfolio will stand you in good stead and give you the confidence to deal with all sorts of things that are going to be thrown at you over the coming years. Thinking about how you make decisions and avoiding those behavioural traps is also important as trustee boards. And finally, the focus on value for money. If we're not expecting such significant returns, what you pay to your fund managers in costs and fees is ultimately really important as well.